very interesting developments in the aluminum market. Of all things, hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. If we look closer here, and you make of it, feel free to leave a comment here, because this is speculation. But riddle me this. Check out this story here. Aluminum traders' huge LME position ignites battle for stock. And we've been discussing this for about 2 or 3 years. This direct connection between metals markets and geopolitics. And we know that, I think, on an intuitive level. We know that anybody that's looked at history, how important natural resources are. So check out this story within that context. Aluminum traders' huge LME position ignites battle for stock. This is Bloomberg News via mining.com. One of the world's biggest metal traders has built up a dominant position in one part of the London Metal Exchange aluminum market, creating a squeeze on exchange stocks and putting focus on the availability of non-Russian metal. And here is the buyer. IMX, owned by China's CMOC Group, has built up an unusually large position in the LME's aluminum contract for delivery tomorrow. So this was on May 16th. So that would be May 17th, which as the third Wednesday of the month is a key focal point for liquidity, according to people familiar with the matter who asked not to be identified. The trade has thrown a spotlight on a battle for aluminum inventories among top traders including IXM and Trafigura Group that looks set to drain non-Russian metal from the LME and leave the exchange's contract much more dependent on Russian aluminum. The position has become a hot topic among traders in the aluminum market, where the outlook is dominated by weak demand on the one hand and production problems on the other. Remember this tale of two narratives. For those that listened last week, this idea that on one hand, we're being told there's peak everything, we're going to run out of all the metals and we're going to run out of oil. There's going to be a huge energy crisis because things are moving too quickly with the green energy transition. So that is one narrative. And on the other hand, we're told we're going into a recession. There's going to be slow, if not negative economic growth globally, that basically we're oversupplied. And we're going to actually see several stories today that emphasize that very point. So this isn't, we have direct examples of this. So here is the first story. And again, to summarize, there is a Chinese trader on the LME that has a huge position which they took for delivery, as far as we understand. Now check out this other story that came out 2 days later. Trafigura tags large LME aluminum volumes for delivery. This is Reuters, May 18th. Now, I thought at first these were two different news agencies tackling the same story, right? But check this out. Commodity trader Trafigura has earmarked for delivery unusually large volumes of aluminum at the LME, the London Metal Exchange, approved warehouses in Malaysia. Two sources with direct knowledge of the matter said, raising exchange supply concerns. Swiss-based Trafigura recently canceled warrants, title documents that confer ownership totaling more than 132,000 tons of aluminum at LME warehouses in Port Klang, Malaysia, the sources said, more than 20% of available LME stocks. Canceling warrants indicates intention to take delivery of metal from LME warehouses. So at first I thought, well, this is maybe the same story, a different news agency. Of course, this is Reuters. The first story was Bloomberg. But then check this out. At the bottom of the article, also attracting attention, was a long aluminum position held by IXM, owned by China's CMOC Group, with large amounts of LME aluminum warrants and nearby contracts, a third source with direct knowledge of the matter said. So these are different stories. So someone, it looks like, at least in one of the stories we know is China-based, is buying up all the aluminum on the LME. And there was even a response from the LME. There's a quote in the Reuters article. And listen to this. As per normal procedure, the LME market surveillance team has been carefully monitoring the aluminum market and engaging with all parties involved to ensure market orderliness and conduct are maintained. So clearly there is a real issue here that we're seeing from multiple angles. And then we have this other story which came out a few days later from Bloomberg News. Russia raises aluminum exports to China to near record levels as sanctions bite. China, the biggest producer of aluminum globally, is importing more of the lightweight metal from Russia, underscoring how trade ties are strengthening between the two nations. as sanctions curb much of the rest of the world's appetite for Russian commodities. Russian sales of refined aluminum to China nearly trebled in April from the previous year to 88,000 tons, according to Chinese customs data. That's the second highest amount on record as Russia's share of total Chinese imports grows in the wake of its invasion of Ukraine. So we know from the first story of IXM, and we know from this third story that China is behind a huge amount of buying of aluminum. Now, it recalls, I'm not sure if it was a congressman or a senator in the U.S. who was saying aluminum itself is a strategic metal, right? And of course, it's used for a lot of transportation, whether it's cars or airplanes. It is a very important metal, particularly in the domain of war. So the temptation is, and again, feel free to leave a comment if you have other theories here, or if you think I'm over-speculating, which is entirely possible. But I just put myself in China's shoes and I go, okay, we have this tale of two narratives. It seems like in the long term, there's definitely going to be a shortage of a lot of metals. And energy prices could go up, what we might call the peak everything narrative. Whereas on the other hand, we have this recession fear, the sense that there could be a, economic crisis. We have bank failures. We have the debt ceiling. There is a sense of recession coming in the second half of the year, and that is a debatable point, but there is a general sense for that with higher interest rates and a tightening of overall liquidity, although that as well is a debatable point. But this is the general sense that we may hit what we might call the soft landing versus hard landing narrative, right? How bad of a crash are we going to have? Is this just going to be a run-of-the-mill recession, as Jamie Dimon seems to be saying, or is this going to be a hard landing? So that is the second narrative. So these two narratives seem to be competing. And just as I was saying last week, this could present a wonderful investment opportunity if you're willing to arbitrage the time. If you're willing to look past, the second half and what might come after a recession, then perhaps this is a great opportunity to stock up on metal on the cheap that we're not going to have enough of. In the short term, there's oversupply concerns in several markets, as we're going to see in the news section. So if you're China, what are you going to do? Let's say you're sitting on a bunch of cash. What do you want to do with your cash? As we talk about Teck Resources takeover, should they trade copper for cash? If anything, copper went down again this week. I want to trade my cash for copper. Not investment advice, but that's how I'm generally feeling. And I think, if you're China, and especially if you're facing war concerns, the West has basically cut itself off from many Russian supplies of metals that they may need. The West is being very threatening to you. You don't want to go to direct war with the West necessarily, because you're not sure the outcome of that. You want to go to war with them as indirectly as possible. And how would you do that? I would be the first thing I would do. Maybe it's because I'm host on the Northern Miner podcast, is I would buy up all the metal I possibly could so that when my opponent goes to war, they're not going to have anything to go to war with. Now, maybe I'm speculating too far here. Again, if there's going to be war drums, and we have to say there are some war drums, I don't want to overstate it here, but what would you do strategically, particularly if you're taking a long-term view? Particularly maybe if you're considering you might be at war for 5 years, or you want to deter going to war because maybe your opponent doesn't have enough to go to war with. A lot of speculation here, but it's pretty interesting to see these three stories kind of line up together within the span of a week. Speaking of geopolitics and mining, the Northern Miner is putting on a new global mining symposium. It is this Thursday in Toronto, in the flesh, at TSX Market Centre in Toronto, Ontario. It is Thursday, May 25th, 2023. If you want to register your interest, simply go to events.northernminer.com, and you could come hang out at a very interesting global mining symposium. As the article on the conference says here, geopolitics are now shaping our industry more than ever as the West decoupling from China sparks a push to secure domestic supply of critical minerals, and the late stage of the debt cycle pushes us towards the de-dollarization of the global economy and the resurgence of gold as a stable currency. So all the things we love to talk about out here, you can find and hear more of at the Global Mining Symposium. Again, just go to events.northernminer.com. And coming up this program, we have two great guests, including Patrick Cruikshank, CEO and Director of 9 Mile Metals, and he discusses the company's very promising projects in New Brunswick. That is coming right up. And then we have Anthony Moreau of American Eagle Gold, and he gives a very interesting interview. You're going to hear of another very promising Canadian metals deposit. So a very interesting, frank as ever interview with the entertaining Tony Moreau, CEO of American Eagle Gold. So we have a fantastic show here for you. And with that, if you want to find us online, you can find us at northernminer.com. You can find us on Twitter at Northern Miner, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, Stitcher, Apple Podcasts, and SoundCloud. And with that, let's turn to Patrick Cruikshank, CEO and Director of 9 Mile Metals, for this week's CEO Spotlight. Joining me today, I'm very pleased to welcome Patrick Cruikshank, CEO of 9 Mile Metals, to the Northern Miner podcast for this week's CEO Spotlight. Patrick, welcome to the show.
Thank you for having me. I'm pleased to be here.
Well, it's great to have you. Tell us a little bit about 9 Mile Metals and what you guys are up to.
Sure. We're very active. We're not a new company. We've been in operation since January of 2021 with our flagship project, 9 Mile Brook and Canoe Landing Lake. In the meantime, we've added on two other big VMS projects, which are California Lake and also our new one, the Wedge project, which has a past historic deposit on it. And we're very excited about our last acquisition. We're very, very active. Like I said, we have about 121 square kilometers in our land package in a certain region of the Bathurst mining camp in New Brunswick, the third largest mining camp in the world, and host to 45 known deposits. And we believe, as well does the Department of Natural Resources, Energy and Mines of New Brunswick, that we've only found 25% of those deposits. There's still 75% out there for us to locate and discover.
Interesting. And are all your properties then located in New Brunswick, or are they other places too?
No, they're all in the Bathurst mining camp in New Brunswick, which is about 40 kilometers west of Bathurst, New Brunswick, on the North Shore, Atlantic Ocean. So it's fantastic infrastructure since the 1950s and 60s. You have all the logging roads, you got power, Trans-Canada Rail, you got deep sea ocean ports that are producing mines there. The world famous Brunswick number 12 and Brunswick number 6 with 336 million tons of volcanic massive sulfides, which is actually what our critical mineral is. It's copper, lead, zinc, silver, and gold. Very lucrative. These are elephants. These are huge deposits when you find them. And can't say anything more than the support and success we've had in New Brunswick, also with the support of the Department of Energy and Mines in New Brunswick, a fantastic jurisdiction, a very, very great infrastructure. Even the local college has mining and technician degrees. We're happy to be there, and it's in a fantastic, safe jurisdiction of New Brunswick, Canada.
Well, that's a pretty big deal, actually. I mean, the timing is better for mining companies these days. In a sense, the tides have changed somewhat from the last few years where it was kind of hard to open stuff. Now there seems to be a bit of momentum. And also having, workers is actually a pretty big deal, like people who can actually run or do things for you at the mine who are, properly trained. So I assume you started drilling. Where are you with these projects? And is there a flagship that we should be focusing on? What's the most exciting thing happening with you?
Oh, well, you're asking the wrong guy, because I'll tell you all four of our projects are exciting. But we do have a flagship project that is 9 Mile Brook. That is about 40 square kilometers in the Bathurst camp. We have discovered a lens. And a lens is, if you think of a brick is then folded and twisted and broken. And it breaks into a series of lenses. And you put together all these lenses and you have a major deposit. Because there's a lot of folding. These were created by underwater volcanoes and black smokers that spewed out copper, lead, zinc, silver, and gold about 470 million years ago. Then the topography and all the seismic shifting and folding and these things evolved over the last 400 million years. The problem we have in the camp is there's only 1% of outcrop. 99% of these deposits are 100% hidden subsurface. So all the easy stuff has been found, right? No more tripping over a rock and oh my geez, there's a deposit at surface. And because these deposits have been folded and twisted and sheared and broken up, they are primarily vertical deposits. So they're, 90 to 75 degrees vertical. So they're very difficult to find, but they do run quite deep. I think the Brunswick 12 was almost 2 miles deep. Don't quote me, but I think it was almost that deep. And it didn't stop production, about 8 years ago because it ran out of mineral. It just got so unstable and so unsafe because it was so deep.
Wow.
It's incredible. But like I said, there's 45 deposits discovered in this camp. 25 are over 1 million tons. And getting back to our flagship, our lens is the highest grade, call it partial deposit, that has ever been found. We drilled it last year and we put about 8 holes into it. We have over 12% copper, 30% combined lead zinc, up to 600 grams of silver, and 1 to 3 grams per ton gold. Think about that. So 10% copper, and that's over about 15 meters, solid mineral block, and then it's a hard break. So we found the first lens. Now we're looking and drilling right now. Actually, we're halfway through a 5,000 meter drill program and doing our analysis from the first half because we're looking for that second lens in the string of pearls or clustering, or we're looking straight for the source vent and source deposit for this lens. But if you get back to the grades, the average grade in the Bathurst mining camp is 0.25% copper, 100 grams silver, 8% lead zinc, and about 0.25 gold. So you can see our grades are dramatically different. And to put it in context, if you have 10% copper over 15 meters, that's the same as 1% copper over 150 meters. It's very dense, very small footprint, but very, very high grade and lucrative. And like I said, that is the highest grade ever recorded, ever found in the Bathurst mining camp by far. So this is a very, very special project. And we're right now using very advanced technology to find the source and the second or third or fourth lens. Most of these deposits are in multiple lenses, like the Caribou deposit right now that's in operation. That's 6 lenses. The Bathurst 12 deposit, the big monster, was 5 lenses. Because of all the folding and tectonic shifting and so on over hundreds of millions of years, it gets broken up. And then on our second flagship project, California Lake, we did a drill program last fall, and we drilled 11 holes, and we discovered a new system. And it comes back to our technology, and I'll get to that in a moment. First thing we do is we take all the existing public data and we reprocess that with new technology, new algorithms, and come up with new targets, subsurface. And we went and drilled those targets just based on reprocessing, and we hit 7 out of 8 holes, up to 18.5 meters of VMS, copper, lead, zinc, silver, gold. So we hit VMS, and that's very, very shallow, up to 100 feet. So we had a very successful program and proved our technology works continuously. And then we have just recently acquired the Wedge project in our geographic area. And the Wedge project has a historic mine, the Wedge mine. It mined about 2 million tons with Cominco in the 50s. There's still about 500,000 tons still there of almost 2% copper, 8% lead, zinc, and silver. We believe our technology, which I'll explain in a minute, we believe it's deeper and it's clustering in multiple targets. So we're really, really excited about our new technology that works in going forward on new discoveries, but also revisit old discoveries and prove they're bigger and deeper, et cetera, et cetera. So that technology, which is very interesting, we use algorithms with our geophysical partner EarthX, and they reprocess all their known data and all of our technological data and geophysics that we have, and then they apply their algorithms to them to enhance them. So we have that output. And then we mirror it with drones and using magnetometers and doing 25-meter spacing and getting a 3D subsurface high definition image that we can rotate and look. So now you can see why when we drill, we're hitting 7 out of 8 of our targets. It's no longer just throwing darts. And we've just added a new component to our technical team, and that's Windfall Geotech, artificial intelligence. So they're taking their models and machine learning backwards, all the data, everything we have, and then target generation in their artificial intelligence model for looking forward. So between the two of them, I think we've got the strongest technical team out there for what we're doing. And since it's 99% hidden subsurface, I couldn't be happier and I couldn't be more optimistic with our quality programs in the future.
It sounds super promising. So you found all this great stuff. You have this great tech. Very briefly, what's the roadmap here? Where is this going? What's the plan?
Well, like I said, we're very active. We don't just do a program once a month and then we're very quiet for the year. We have a full crew, warehouse, XRF lab, vehicles, everything, field team in New Brunswick. We're a fully funded company. We are halfway through our current 5,000 meter drill program at our flagship, as I mentioned earlier, looking for the next lens or the actual source. So we're in the middle of that right now. And then we have just permitted the wedge. We're going to continue and drill the wedge program. And we're also going to circle back on phase 2 on California Lake, which is now bringing in the drone, flying that discovery and enhancing it in 3D, and now come with the bigger, deeper drill program. And lastly, our Canoe Landing Lake project. We are right beside a 30 million ton VMS deposit called Canoe Landing Lake. We believe it goes under our property, and we are going to test drill that quite deep. We believe it continues underneath our claim boundaries. So we're going to be doing work on all 4 of them. And like I said, we're a real exploration company. We are active every month, full year round. And that's another great thing being in New Brunswick, Canada, is we have access all year round and support from local community, great partnerships in New Brunswick, and can't say anything bad whatsoever. They've been fantastic and we're happy and feel lucky to be there actually.
Okay, excellent. And just in closing here, in a couple of sentences or so, what do you want investors to know about your company, just to wrap it up here?
Economics, these deposits are going to become more and more valuable, and the prices will continue to go up. And I like to call them critical minerals, and clean minerals are more essential minerals. So we're in the right sector, right space, right country, right jurisdiction.
Patrick Cruikshank, CEO of 9 Mile Metals, thank you for joining us on this week's CEO Spotlight.
Thank you very much.
And turning to the website, not enough resources for electric vehicles to be only cleaner car option, Toyota says. And this is Reuters via mining.com, and it says here a lack of resources means battery electric vehicles cannot be the auto sector's only answer to climate change, Toyota Motor Corporation top scientists said Thursday, warning that focusing on BEVs, battery electric vehicles, could lead some drivers to hold on to polluting vehicles. Some investors and environmental groups have long criticized Toyota for being slow to embrace battery electric vehicles, saying it has lagged Tesla and others amid growing global demand. The world's top automaker by sales has countered that BEVs are just one option, and that gasoline-electric hybrids, such as its pioneering Prius, are a more realistic choice for some markets and drivers. Gil Pratt, chief executive of the Toyota Research Institute, told reporters that BEVs could make a positive difference in reducing climate change in countries such as Norway, which has a lot of renewable infrastructure, but in other parts of the world where coal is still used to produce power, hybrids were better for CO2 emissions. Quote, battery materials and renewable charging infrastructure will eventually be plentiful, Pratt said in Hiroshima, a day before the start of the Group of 7 Leaders Summit in the Japanese city, but it's going to take decades for battery material mines, renewable power generation, transmission lines, and seasonal energy storage facilities to scale up. Decades. So the way Toyota is framing it is that BEVs are, quote, one very important option, end quote, for achieving carbon neutrality, and hydrogen is as well. So they're also promoting hydrogen. So you can see they're trying. It's kind of almost the all of the above option seems to be what Toyota is suggesting. And a couple of stories here just on what we might call the battle for the global south and its resources. Macron says Mongolia to supply critical metals for green push. This is Bloomberg News via mining.com. So Macron makes another move which somewhat nestles him in with China and Russia, because remember, Mongolia is the country where they're building these massive pipelines from Russia to China through, right? There was some conference maybe 4 or 5 months ago where they were formalizing that deal, if memory serves, and here France is now saying, hey, we want critical metals from Mongolia. right in the middle of that huge deal between China and Russia. So France seems to be embracing what we might call the global south, and China and Russia economically, at least indirectly. Again, this can't make the U.S. very happy. Continuing the story here, Mongolia has agreed to supply critical metals to France that it needs as part of its shift to a less carbon-intensive economy, Emmanuel Macron said on Sunday during the first ever visit to Ulaanbaatar by a serving French president. So no French president has ever visited Mongolia, if you can believe that. The trip was aimed at boosting ties between the two countries, in particular in relation to the environment, agriculture, and the food industry, as well as reducing Mongolia's dependence on its Russian and Chinese neighbors, according to a statement from Macron's office. So some brilliant PR work from the French president's office there saying, what we're really doing is reducing Mongolia's reliance on China and Russia. That is pretty, you have to laugh. I have to laugh. I mean, maybe they're being genuine. So here's a quote from Macron to President Khural Suk Ukna, who again, as far as I understand, was just meeting with Putin and Xi like 4 months ago or so, 4 or 5 months ago. This is Macron, quote, "We decided to work together to strengthen our energy sovereignty through the supply of critical metals from your country, which has this resource." He added that an existing partnership with French nuclear group Orano SA would be key to enabling the extraction of critical metals. Macron added the two countries would cooperate on renewable energies and nuclear, as well as working on bilateral and international financing to help the decarbonization of Mongolia's economy. The visit is the second by a European head of state this year, following that of Polish President Duda in April. And here on the other side, Congo president heads to China amid mining contract negotiations. This is Bloomberg News via mining.com. Democratic Republic of Congo President Felix Tshisekedi will visit China next week as the two nations look to conclude the renegotiation of a $6.2 billion mineral for infrastructure deal. People with direct knowledge of the trip said, mineral for infrastructure deal. It's the president's first visit to the country, Congo's biggest trading partner. The two nations did $21 billion of trade in 2022, according to data compiled by Bloomberg. And this is interesting as well. Tshisekedi is scheduled to travel to Beijing, Shanghai, and Shenzhen May 24th through 29th, with a contingent of government officials, including his ministers of mines, hydropower, and defense. Again, Minister of Mines, Energy, Hydropower, and Defense. China is the primary destination for most of Congo's copper and cobalt, a key ingredient in electric vehicle batteries. The Central African nation produces 70% of the world's cobalt and was tied with Peru as the second biggest source of copper last year. In 2008, Congo signed a deal with Chinese state companies to finance $3 billion of infrastructure projects using the proceeds from a $3.2 billion copper and cobalt mine. The landmark agreement was signed at a time when Congo was struggling to secure financing after the war. And remember, we discussed this story a while ago, maybe a month or two ago. Tshisekedi was, remember, complaining about this deal with China, and then we have a quote here, it was, quote, badly drawn up, and that Congo had, quote, derived no benefit from it, and that the president said the deal needed to be, quote unquote, rebalanced. I guess China was listening, and they said, hey, why don't you come over? Smart move. And then here are just a few stories, few headlines on oversupply. Zinc price could hit $2,000 a ton by 2025 on ballooning surplus. This is Reuters via mining.com. And it says here, refined zinc prices are expected to be on a downward trend until 2025, as weak demand growth failed to match with a surge in production, analysts said. And we have a quote from Dina Yu, an analyst at consultancy group CRU Group. Demand for zinc will be relatively weak in coming years, while zinc mining and refined output are still growing. This will put pressure on zinc prices. So again, here we have oversupply concerns, whereas it seemed like only a year ago everybody was concerned about zinc. So it's funny how the narrative changes here. Nickel prices seen falling as global surplus looms. This is Reuters via mining.com. Global nickel prices are poised to decline over the next few years as top producer Indonesia ramps up supplies and production costs fall, industry watchers predicted at metal conferences this week. Indonesia, which made up 38% of global supply in 2021, is set to quadruple its nickel capacity to 1.2 million tons between 2021 and 2025, said Chen Yan, head of basic materials and engineering research at CICC. And Chen also said the planned incremental capacity from Indonesia would significantly relieve the supply bottleneck in nickel sulfate in the next 3 years. So it really depends who you talk to and when as to whether we're going to have a massive surplus or a massive deficit on many of these items. And finally, just a couple of more kind of odd stories. So companies that were both involved in M&A type stories, Newcrest Gold Mine faces probe for dust pollution in Australia. So, of course, they just had that deal with Newmont. This is Bloomberg News. Newcrest Mining, which is being taken over by Newmont Corporation, is facing an investigation by Australian environmental authorities following complaints of dust pollution affecting residents near one of its largest gold mines in New South Wales. So that is one story. And then we have one more story. Teck Coal named in U.S. legal action over selenium contamination from BC mines. And this is by a staff writer at mining.com. A legal action filed Thursday in Montana names Teck Coal as one of the 3 defendants in a request for judicial review by environmental groups in Montana and Idaho over levels of a contaminant from its British Columbia mines in U.S. waters. I just thought it was striking. I'm sure it's just a coincidence, but it's kind of funny that these two, massive M&A stories, all of a sudden they both have these environmental legal issues in the midst of all the M&A discussion. Just kind of interesting. So those are your news stories. Now let's take a look at metal prices. And turning to metal prices, let's take a quick look at the U.S. 10-year Treasury bond, and it is yielding 3.723%. This is interesting because the 10-year bond from our, little measurements here seem to be stuck in a trading range of sorts between 3.4 and 3.6. It has broken higher to 3.723%. Now, there could be so many reasons for this. I assume it's on the debt default debate in the U.S., where I assume the closer an actual default comes, the higher yields will go, ignoring any potential recession fears, which might have driven the 10-year yield lower, let's say. So there is your theory on the U.S. 10-year bond, courtesy of the Northern Miner podcast. For what it's worth, turning to precious metals, gold is trading at $1,981.20 per ounce. That is $34 lower than last week. Silver is trading at $23.85 per ounce. That is 4 cents lower than last week. Platinum is trading at $1,068.54 per ounce. That is $2 higher than last week. And palladium is trading at $1,489.39 per ounce. That is $41 lower than last week. So platinum holding steady while other precious metals fall. There has been a lot more talk about shortages in platinum in the last week. Turning to our industrial metals, copper is trading at $3.67 per pound. That is 5 cents lower than last week, so continuing to fall. Iron ore is at $107.16 per ton. That is 39 cents higher than last week. Aluminum is unchanged at $1.03 per pound, significantly unchanged within the context of all these stories that we opened up with here. Lead is 2 cents higher at 96 cents per pound. Nickel is 43 cents lower at $9.60 per pound. It's been a while since nickel has been below $10. Tin is higher at $11.54 per pound. That is 27 cents higher than last week. Cobalt is unchanged at $15.84 per pound. Lithium is also higher at $32.36 per kilogram. That is $3 higher than last week. Uranium is unchanged at $53.40 per pound. And zinc is 5 cents lower at $1.10 per pound. What do we see? A bit of a general decline significantly in nickel and the precious metals, except for platinum, which is interestingly showing strength, aluminum, which has stayed steady, and lead, which is actually higher, and tin, which is actually higher. So kind of a mixed bag here, waiting for a resolution here on our debt ceiling debate. I guess the gold price was supposed to have fallen on an optimism on the debt ceiling, but maybe yields are higher on pessimism. So a mixed market here, and those are your metal prices. And coming up, my in-depth interview with Anthony Moreau, CEO of American Eagle Gold. And I asked him all sorts of questions, including on the Teck Glencore deal and everything. And he was very gracious in his replies, and a very kind of heart-touching story about his uncle who passed away, who really helped him find this massive, what looks like extraordinarily promising deposit over in BC that Teck has wanted to be a part of. Anyway, we get the full story here. Thank you once again to Anthony Moreau for doing this interview. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome Anthony Moreau, CEO of American Eagle, to the Northern Miner podcast. Anthony, welcome to the show.
Thanks a lot, Adrian. Long-time listener, first-time caller. Excited to be on.
Yes, I love the whole tradition of talk radio, so that's great to hear. So tell us a little bit about yourself. I mean, I've heard your name before in the industry. I think a lot of people have, but for those who haven't, can you just very briefly introduce yourself, what you're up to at American Eagle Gold?
Sure. Long story short, Queen's University grad, worked over 10 years at IM Gold. Probably 8 different positions there, learned the ropes in mining, worked for a great mentor and Steve Letwin, worked at the site. He always said, the best fertilizer is the footsteps of the farmer. So you got to be at site to really understand the business. And, working at a mine site, it really kind of showed me how little I knew about mining until I was actually there, and how important things like drilling and, the cooking staff are. So, from there, I volunteered at a not-for-profit called the Young Mining Professional Group. We have chapters all over the world. There's about 5,000 members in Toronto. And, the chairman of the group's a guy named Steve Stewart. And, I think one thing a lot of people don't like to do is public speak. And I just became the person that was public speaking, introducing all the big speakers at the events. And this person who was a chairman of the YMP and chairman of the OR group kept on asking me to join his group of companies. And I saw some glass ceilings at IM Gold. It was a great company, but I kind of had to go somewhere in life or just stay in that same position forever, which a lot of people do at these, mid-tier or major companies. And I bit the bullet. I took the shackles off and I joined junior mining. And, Adrian, I've never really looked back. It doesn't really feel like a job. You're always solving problems all the time. You're talking to people. There's the highs of highs and the lows of lows, but it doesn't really feel like a job, and you're always busy. And been doing that for 2.5 years now. I joined the OR group, and Steve Stewart said, I'm going to give you a year to learn the business. And after that, we can figure out what you want to do if you want to run a company. And Adrian, I think it was day 2. And he said, you got to go on Crux tomorrow, and you're going to be running American Eagle Gold, today. And I said, I don't know the business yet. And he said, listen, it's sometimes just baptism by fire, and you'll learn it. You're a good leader, good speaker, and you'll figure it out. It's been 2.5 years now, and we started off in gold in Nevada, and now we're copper and gold in BC. So it's strange how things happen. That's kind of the route that I've taken.
Amazingly to myself, I've actually met both Steve Letwin and Stephen Stewart. Stephen Stewart's been on the show, and I could totally imagine him. He's a very entrepreneurial guy. I could very much imagine him by day 2 just going, yes, this is a good fit. Let's go with it. We don't need to wait a year. Let's just go. So that's great. And that's a great story. And it's kind of a cool story, a Canadian story of making your way up in the mining industry. And you're not that old of a guy, from what I can tell here. So that's pretty cool.
I feel pretty old when I'm working with all the new grads and the scholarships, those 20-year-olds, 21-year-olds coming out of school. I do feel a lot older, but age is just a number, really.
Great. Okay. Well, it's so true. Now, you've been in the news here, or at least American Eagle Gold has been in the news. It's kind of this weird side story to this whole Teck Glencore drama that's been happening. And it sounds to me, from what I understand of the story, that Teck has invested in American Eagle Gold. Could you talk about this story and basically what's going on there?
Yeah, it's absolutely amazing. We have a project called NAC. It's near Smithers, BC, which is, interior BC, British Columbia. We have a great asset. We started drilling there last year, and our stock went up 1,000% overnight. We got a great project, Copper-Gold Porphyry. We hit Dynamite Hole, our very first one. And, the 7 drill holes we actually drilled, they all came up with really good copper and gold. But, as these junior markets work, we went from highs of highs and we started tailing off our stock price. And, for us, my job as a CEO is just not to blow up our cap structure. And, obviously it's to find a big deposit, but you also got to realize you're running a business. So you got to make sure you have enough money to look after that business. So our challenge was, and, investors for the last month and a half before this Teck thing, they knew that we were going to do a raise. And we even had some big analysts that wanted to promote our company, but they couldn't because they didn't want to promote a company to investors for a company that they knew were going to do a raise and it was going to go down because there'd be a discount associated with the raise, which happens 95% of the time. But we did this deal with Teck, and it was absolutely amazing. It was a boon for us. And why it was different was, for many reasons. First of all, it was a partnership with, I think one of the most respected, if not the most respected mining company in the world. Definitely most respected mining company in Canada and Teck. But it's a tricky market. Even though, the general indexes are doing a little bit better, the junior markets are still really down. And Adrian, look, there's about 900 other junior mining companies in the business. There's 900 other CEOs that are doing the exact same thing that I'm doing. And the problem is there's a lot of white noise. There's a lot of options to choose from investors. They don't have the time to, decipher whether what you're saying about your property is true or not. Geology is like rocket science. It's hard for people to really understand what you're saying or if what you're saying is true. And when you have a company like Teck that comes in, who's respected, has a really good track record of making world-class discoveries, even on the junior side, people don't even realize they're involved with Hemlo, they're involved with Voisey's Bay, they're involved with New Afton, before they even became these huge mines. So when they come in, they all of a sudden give you that check of approval and credibility for, our project in NAC. But what else they do, which is great, they get you in the news. So when Teck, especially when they're doing a deal with Glencore, all of a sudden Teck and American Eagle in the news, and all of a sudden, American Eagle is in there. And then one of our big challenges is it's like a tree falling in the forest. We got a great project and a great team, but do people really know where we exist? And when we do a deal with Teck, all of a sudden we're in the general news and people know about us, which means they'll look at us a second time. And the other great thing about, doing that deal with Teck is, we're able to do it at a premium. We're able to do a, strategic charity flow through financing, which means our stock at the time when we announced a deal was 10.5 cents. And usually if you raise about $3 million, that deal would be probably 7 cents with a bunch of warrants, which means overhang with probably 20, 50 different investors that could sell your stock at any time after the 4 months of 1 day is up. And all of a sudden now, we did sell 15% of our equity, but that 15% is held by Teck because they love our property. They want the first rights to work with us if this does become a big mine or property or project when we think it will. But those shares aren't going to be traded. We traded at a premium. And in the end, our stock was 10.5 cents. We did this deal at 20.5 cents. So the amount of dilution we had for this deal with no warrants was as small as possible. So there's 4 different reasons why we like this deal. And we're very happy. And, we like partnering with Teck, who we think are just a really good company.
How long have you been basically in contact with them? Like, did it come as a surprise to you when they, offered this? Have you known them for a while? And ultimately, I guess my question is, why do you think they chose you? Is it as simple as the property is just that good and they just want to be a part of it?
Yeah. So a couple questions there. So, first of all, these things don't happen overnight. If you're making a $3 billion deal or a $3 million deal like Teck did with us, obviously there's more work than a $3 billion deal, but there's not a whole lot more work to be put in. It's still 6 months of time, site visits, data room, lots of people involved, etc. And when we came out with the first drill hole, I put together a list of all the major mining companies in the world, and I found 4 different people from each of those companies, and I emailed them the results. And from that, we got calls from, I think the first day, 4 different major mining companies. And from that, we had a few companies in our data room, and Teck was our preferred partner. We've been working with them pretty much since November. They've done site visits. They've seen the core. They've met our team. They met with our community team. They've gone into our models inside or out. And the main reason why they bought us is, look, I like to say, we have a great team. We have good geos, but they're not a charity and they're not stupid. And they haven't gotten to where they were by just giving companies money because there's nice people there. The biggest reason why they invested in us, probably 99.9%, is because they love the property and they love the opportunity of the scale and the size and the high grade. And our property is very unique. It's different than a lot of other properties in Canada or even the world because of the bornite. And they invest in us because of the property. Now that 0.1%, I would say that's probably the management team and the geologists. But those are the guys that actually could ruin the deal, not make the deal. So long story short, they invest in us because they love NAC.
I love it. Can you talk very briefly about what is there? I mean, it's a copper gold project. I mean, it's a very high grade thing. I mean, it sounds like you had a great drill hole, but what do you know of what's there at that project?
We know there's a lot of copper. We know there's a ton of copper. Historically on the property, before we got there's almost 20,000 meters of drilling. There was work that was done there since the 60s, but a lot of that work was analog, which means it was done on paper. And, people didn't really, compare all of the previous work. They worked in silos. Someone maybe done geochem, someone did some geophysics, someone did some drilling, and no one bothered to bring all the data sets together. And when we were in Nevada, that's where we started our company. We're drilling in Nevada. It was a closology play, and we drilled there, and we hit some dusters. We just realized Nevada's one of the toughest places to explore in the world because the ground's really tough to drill, and it's hard to find a driller. And you're competing against Barrick and Newmont with their whole JV, and they pretty much have cornered the markets with the drillers. And, it doesn't matter where you are. Nevada is a great place to mine. It's not a great place to explore because exploring is all about putting as many meters in the ground as cheap as possible. And for what you're paying in Nevada, you might as well be on the moon. And my uncle is a geologist. He was the head of exploration geology for Freeport in Indonesia. And he did the original mapping at Grasberg, which is, probably the top 5 biggest, most economic mines in the world. Now, Adrian, this is how big it is. It has more gold ounces on it than any other mine in the world, almost 100 million. But it has so much copper, it's actually called a copper mine. That's how big that mine is.
You're talking about Grasberg.
Grasberg, yeah.
Yeah. It's a company maker, right? I mean, for Freeport or not?
It absolutely is. It just creates cash hands over fist for Freeport. It's their crown jewel. I think the Indonesian government probably owns around 50% now, but it's still like a moneymaker for them. My uncle did the original mapping from there, and he found this NAC property. And what he said was, he told me, he goes, I got a property for you. He goes, I can't guarantee you anything, but it's the second best targets I've ever seen on a project next to Grasberg. And, my uncle's saying that, I thought he was on crack or something. That was too crazy, some comments. And I looked at it, and what I saw was, what I think everyone else saw. There's a lot of historical drilling in lower grade. But when you peel back the onion, what you see is that all that drilling was an average depth of 175 meters. None of the companies that worked on this property, about 7 of them, used the data sets of the ones before you. So they're all working in silos. So what my uncle and his partner did, they spent a year and they did, easy work, but work that people and companies don't want to do, which is essentially digitizing all the years of data, 30, 40 years of data. And then once they digitized it, they combined all the different data sets, which you can technologically do now. And what they show was all the data sets, the geochem, the geophysics, the drilling, IP, everything, it all showed that there was a huge target pointing in the exact same area. So we ended up buying this property from my uncle and his partner right around the time we started to hit dusters in Nevada. And luckily we did that because our stock went from around 20 cents to 2.5 cents. And when we started drilling, the following August and our results came out in November, stock went up 10x and we hit a robust hole right off the bat. But what a lot of people didn't realize, or what you have to explain to people, is our first drill hole was really great. But our second drill hole was just as good, and our fourth drill hole was the best one almost historically in the whole Babine region. And people have been mining there for 30 years, and they ran to mine there from the 60s until the late 80s or early 90s. And it's a combination of copper and gold. There's a ton of copper, but there's also a ton of gold. So our south copper gold zone is probably 70% gold versus copper, and our north zones, I would say about 80% copper versus gold. And they work well together. And what they have there is something called bornite, which you don't see a whole lot. It's a holy grail of copper ore. And bornite's about 2/3 copper per weight if you grab a piece of bornite. And we also have something called chalcocite. And chalcocite's about 83% copper per weight if you grab it. And why that's good is obviously it's really good for the metallurgy. The companies want to put that through the processing plants. It makes it a lot cheaper, easier to process. Our ore is super clean. And last year, what we did is we drilled along a fence, and now we got to do step outs to show that, we do have a lot more size, a lot more high grade to hit. Our head geo, his name's Neil Proust. He's a protege of a guy named Charlie Gregg. Charlie Gregg's been around for a long time, super smart, gregarious guy. He made the GT Gold discovery, and they sold to Newmont for $400 million 3 years ago. So if you want a geologist running your program, you want the guy that made the most recent discovery close by, and that's Charlie Gregg and his partner, Neil.
Well, what a great story. I love how data, almost like the processing of old data, is how you're able to almost synthesize. I mean, you're just taking what was already done. And then once you put all that data into the machine, so to speak, all of a sudden you had a picture of what was going on.
You also got to remember, back 20 years ago, you couldn't even, you had to helicopter into this property. You didn't have the proper equipment to drill deep. Now, because of the whole forestry industry, you can back a semi right onto our property. It's low elevation. People talk about the Golden Triangle area. That's great. They got a lot of big, robust deposits, but we're in a lot better area infrastructure wise. We don't need helicopters. We think with our discovery, we can open up this whole region. One thing I want to add is a pretty sad part of the story. So I was really close to my uncle, and he found us this property because he loved me. I was closest with this uncle, more than any other uncles I have. I have a lot of them. And he actually died right before we came out with our first result. So he was there for their first drill hole. And right when our first drill hole ended, he unfortunately passed away 2 months before our results came out. Just died of a heart attack. He was living in Cambodia. But the thing that he said to me was he knew right off the bat that we had some great drill holes, because he said he doesn't care what the processing says. He said he could tell by the core what it is, if there's something there. And when they pulled the core of the ground, even though he was in Cambodia, I saw the pictures, he said, Tony, you got something here. And that got us really excited. We ended up doing some more interesting financing. So we drilled all the way throughout the year. So it's a bit of a sad story, very sad. But, I think there's a bit of a reason why my Uncle Gary, led us to this property and why it's done so well so far. So we want to prove him right, name this thing after him eventually, and make our shareholders some money.
I mean, the timing is unbelievable. So he never saw the results of that first drill hole.
He never saw him, but he always, I've known him for a long time.
He knew, but it was never really, like, in a sense, confirmed.
Yeah, it's kind of sad. But he knew from the core, so
that's wild.
A couple of months ago.
Well, I'm sorry to hear your loss there. Like, what an incredible story here, and it's got a little bit of pathos. It's got a little bit of family drama. It's a great Canadian story. You coming from really almost nothing there and working your way up, IM Gold, and then CEO. Like, what an interesting story this is. So, backing up and zooming out a little bit, I mean, we've had this Glencore deal with Teck, trying to take over Teck, and now you're kind of weirdly involved in this whole situation. I mean, do you have any opinions on this? It's a fairly controversial issue in a sense. I mean, Mark Bristow came out, saying we need to be careful about the economic nationalism coming out of Canada. Do you have any thoughts on this whole, Glencore Teck situation?
Look, I want to say, first of all, I don't know anything inside from Teck. Also, like, they've been really good to us. They're really good people. I don't want to bite the hand that feeds me and start coming up with some weird ideas that they're getting in the newspaper, etc. But the one thing I can say, which isn't, anyone can figure this information out. A lot of people at Teck have worked there their whole careers. I've worked with some people there, worked there for 35 years, 20 years is the only place they've worked. And I think what that says about Teck is that they have great values and a great culture, and people want to work there. It's a family atmosphere. And I think if you have a great place where people want to stay and people want to work and want to go to, the people are the tide that raises all the ships. So if you have great people that work at a company, you're going to eventually succeed. And the money follows the success. And I think Teck's got a great culture. And I'm just not sure how well that would, mingle with Glencore's culture. I don't know Glencore too well, but I've read a lot of the stuff in the news. And, the one thing that I can also say about Teck and, the scholarship stuff that I'm doing, they do a lot of great stuff for the province of BC, the city of Vancouver, a lot of stuff for R&D, a lot of stuff for exploration, which I think is really good for the country and really good for, mining in general. So it'd be really too bad if, that disappeared, which I hope it doesn't. Also, like, for any kind of M&A, in general, I'm not just talking about Glencore and Teck. It's, what's your long-term goal? Where do you think copper is going to be? Copper is so important for the electrification of the world. Forget lithium and all these other metals. Copper is a bottleneck. You got to get electricity from point A to point B. And the only way you're going to do that is through copper, the copper wiring. So if you don't have that, then you don't have any electrification. And, I think right now copper's at $3.75. I always tell people gold's always a good investment, but if you could buy physical copper, like that's a no-brainer. Where's that going to be in 8 years? And if copper's going to be $8, $10 in 5 years, where's the stock of your company going to be? So yeah, look, I don't really have any insight on Glencore and Teck. I hope Teck stays its own company for obvious reasons. I think there's really great people that work there, the great culture, great family atmosphere, but I don't really know what's going to happen with that deal moving forward.
To your point about Teck, I mean, it seems to me as just, someone that reads the news and has just been involved at the Northern Miner. So, just kind of looking from a distance, it seems like they take their role as kind of these stewards of sorts of mining in Canada. They kind of take their role as leaders in the industry quite seriously. To your point with all this, they kind of give back and they care about the culture of mining in Canada, it seems to me.
They are the company I'd put on the pedestal for mining in Canada, or like even mining in the world, of how to treat your people, about how to treat the communities. Like, people don't want to know how their sausage is made, but you need mining. You need it. Like, you got the Apple iPhone, you got your buildings, you need that copper, you need that steel from somewhere. So if those mines already exist, you want the company to have a really good track record of doing it well and environmentally safe and health and safety wise, to be, creating those products. And Teck's one of those companies that does it the right way. Sure, you can get copper and iron ore from Indonesia and China, but, are they looking after the environment? Or are they taking care of their people? I can't say for sure, but I would guess probably not as well as companies like Teck or other companies in North America. And, we work so hard to look after the tigers in Indonesia and the pandas in China, but, then we'll all of a sudden just let these companies create these metals with no stewardship that are essentially ruining the environments of those pandas and those tigers in those locations. I guess it sounds kind of crazy to say, but, we have one world and one roof. We got to look after it everywhere. And, if you got mines already running, you're better off running it in places where you can actually have some oversight. And then you got other, benefits like jobs and not transferring, wealth from west to east. So that's kind of my opinion on it.
Yeah, so it seems like there's kind of like the cultural side to it and the role they play. And just as we're wrapping up here, but there's also, it seems like you're saying there's a valuation issue too, in your humble opinion, that look, I mean, copper's pretty cheap and we need it, and it's only at $3 something, and we look at the fundamentals and then we go, is this the right time to sell this thing? Would that be fair?
Yeah, that's fair. Like, I think copper is, I can't see it going a whole lot lower than 375. I think long term it's going to be a lot higher. But there's a lot of other factors that go on with this Glencore Teck stuff that's, beyond my pay grade and that I understand. There's arbitrage, there's stuff with yield, etc.
Sure.
So I'm not going to pretend to understand that. Really quickly, though, like the one thing I got to talk about really quick, like if you look at coal, which is really interesting, I've been reading up a lot about it. And I think the one thing is you got a lot of companies that want you to get rid of your coal assets, etc. But, even when it comes to our news releases as American Eagle, no one ever reads the title. Sorry, people only read the title. They don't read the base information in the news release. We've said 3 times when we're going to drill next. I still got investors that put $100,000 in our company asking when we're going to drill. And I think the same thing is true with coal. I think people just see coal and they just think there's a scarlet letter over it. But if you ask the average person, even all those people against coal, what coal does, they wouldn't even know the difference between thermal coal and met coal. And as a quick education, you need steel. We do need steel. If you want cars, if you want infrastructure, if you want buildings, you need steel. There's no way around it. And the only way to produce steel is through coking coal. Coking coal essentially is you burn it till about 1100 degrees, turns into something called coke, super high in carbon. And then in order to take iron ore, which is iron and oxygen, if you take that to, pig iron, which is pure iron, you need coking coal. And it creates a chemical reaction, which essentially what happens is this carbon strips off all the oxygen off the iron, and it creates the byproduct of carbon dioxide, which essentially creates all the carbon emissions. But without coking coal, you don't have steel, and without steel, you really don't have growth in the world, etc. And there are other options to produce steel, but they're not economically plausible right now. They're still in the beginning stages, like hydrogen steel plants. So 70% of the world's iron steel is produced from coking coal. The other 30% is from recycling, and more steel is recycled than any other metal in the world. So I just want to kind of say that coal isn't the worst thing in the world, and mining coal isn't the worst thing in the world. And it's just good that some people have some education in terms of knowing what coal is which. I don't think thermal coal is great, but if you want to focus on something, focus on China, where 50% of the emissions come from. So just kind of saying that.
Fascinating, and I think very educational for a lot of us out here. Can you speak very quickly here on how it is working in Canada? I mean, the flow-through share structure you mentioned earlier. Do you want to speak about just how Canada is doing, and what should it be doing more of, if you can put that in a few sentences?
I love working in Canada. Canada is a big country, a lot of different provinces, and a lot of different communities within those different provinces. So I can only speak to the region that I'm in, which is amazing. Great infrastructure. We work with the Lake Babine Nation, who are amazing people, really easy to work with and get along with. So I have a really good experience. In terms of the Canadian government, Look, everyone could be doing more, and there's always complainers out there, but to create ways for us to raise money by diluting our shareholders very little, which I think shareholders should be happy too with. And we did something called charity flow through with Teck, which Teck was gracious enough to do, which they didn't have to. But essentially what it does, Canadian government gives you an extra premium on whatever money you raise if it goes in the ground. So they want to promote exploration. Different provinces, you get different flow through premium. You get it for different metals even more. So we're in BC, we're doing a strategic metal in copper. So we got the biggest premium possible. So you already get an X premium on that. And we did something called charity flow through. So essentially Teck, what they did is they bought our shares at 13 cents, but they bought them after another company, Oberon, bought them for 20.5 cents. And what they did is they sold those directly to a rich investor. And that rich investor donated to them on behalf of themselves to a charity. So that rich investor got a tax shield, and then concurrently, this all happens at the same time. It goes back to Teck. So the charity and the flow through premium got stripped out, and the shares got sent back to Teck, which really helps us. And we had a lot of different parties that worked together. It was a pretty smart deal, and thanks to our chairman and our CFO Joel Freeman, that's how it works. But in terms of Canada, you can always complain about things. I think it's a great country, great place to work, and I have no problems with it.
Okay, excellent. What would you like people to know that maybe they might not know? I mean, you are as CEO of American Eagle Gold. Do you have a message, in a sense, for people out there who might be listening? Things that we haven't said here?
I just want people to know our ticker. It's AE. We're on the TSX Venture. I also want to let them know that, people at our company, me, like I wake up thinking about the company. I go to sleep thinking about the company. I know everything around our company. I want to do well by our investors. And my number one focus is making sure that we are a success. I'm not going to tell you to necessarily invest in our company or how your portfolio should be broken up. But I believe that, portfolios should be split up a certain way, and there should be X percentage that's put into risky stocks. And I'm trying to fight over that X percentage of the risky stocks that you want to invest. And, finding a company that makes a discovery, it's almost like finding a needle in a haystack. My job is to make that haystack as small as possible, which makes the probability of making that world-class discovery as high as possible. And if you have the proper portfolio of your risky investments between 5 companies, I want to be one of those 5 companies, because guess what? If you hit a 10, 20, 100x, that makes up for the 4 others that could be losers. And if you have 2 guys that are 20, 30x, like you're really singing. So the one thing that we have that's great, we got a great property with a great team. We're going to be drilling soon, a lot of catalysts ahead. And it's AE on the TSX Venture.
Anthony Moreau, CEO of American Eagle Gold. Thank you for joining us on the Northern Miner Podcast.
Thanks, Adrian.
And thank you once again to Anthony Moreau of American Eagle Gold for joining us during this very important time for the company. For all the listeners out there, thank you once again for listening, and come join us on Thursday in Toronto at the TSX Center to discuss geopolitics and mining, a fascinating discussion for scholars and investors of all kinds. Just go to events.northernminer.com. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.